What is up? At a trade recap today going for you. Gonna put this in my trading journal. Trying to keep this one a little longer. Just because I want to fucking talk more, and if I can remember exactly what I'm thinking, we'll find out. Um, but I'm gonna give you a little trade recap of what I saw today. I missed out on a 1 to 5 potentially. It could have been more. At least a 1 to 4 if I left runners and partials. Um, but kind of fucked me, right? So I only took a 1 to 1.77, which is shitty RR. I will at least want a 1 to 2, and that's why I should have left runners. It was stupid of me, but feel that emotion, learn from the mistake, and fucking don't make it again. It's the goal. But we're gonna go into the market today. This is going over May 6th, and I'll show you what I was saying. So right off the bat, up here we have a 1 hour fair value gap. You'll see in the 1 hour chart we have a 1 hour high right here, 1 hour high here, 30-minute fair value gap, a 1 hour fair value gap in between here. You'll see. But we have a 4 hour low right here, another 4 hour low right here. Just something to note. No, that's a 1 hour low. 4 hour low down here, and then a 4 hour. I did not think we were going to come all the way down to this 4 hour or this low today, but we go off what market gives us. We don't. How we get our bias is from you wait for the liquidity sweep and see what market's going to do from there. But we go on the 1 hour time frame. You have the 1 hour fair value gap right here. We have that high right here. We had up candle, down candle, highs to the points. This was the 4 hour high. We have a 1 hour high right here because we had the. Yeah, I'm gonna get rid of my screen actually so you can webcam. There we go. Up candle right here, down candle. Up candle here, down candle, and then up candle here, down candle. You pick the biggest of the two wicks. We had the 1 hour fair value gap, which maybe stretch it out. Right there, 1 hour fair value gap. We had a 1 hour high right here, and we'll have fair value gaps in between there, you'll see. But like I said, we wait for market open. We mark out everything on the 4 hour and the 1 hour time frames, draws and liquidity, fair value gaps, imbalances, where market might want to go. Then I go down to the 5 minute is usually where I set up on a market open. In this case, we're going to sit in the 1 minute. Actually, we'll sit on 1 5 minute thing. By the way, that is ES. This is where I took the trade. NQ is where I also took that trade. High here, low here, down here. We're not worried about fair value gaps on NQ right now. We'll get later into that, possibly. But let's just start up market open. At this point, it's 8:15 a.m. Play a few candles. Boom, market opens. By the way, today we had a no news day. The only thing we had was, hold up. Only thing we had was trade balance at 7:30 a.m. and that was it. And that's the yellow folder. So let's get into the charts. First off, what do you see? We have a 5 minute fair value gap right here. We'll just mark that out, actually, because that's going to be important, somewhat. We're on the 1 minute time frame. Yeah, market opens. We have the 5 minute fair value gap right here. I can label that 5 minute. As you see, we're trending up, right? No other 5 minute fair value gaps to really know. Maybe this one right here. Fill orders within here. We're not looking for anything because we haven't got a liquidity sweep yet on any time frame. Like I said, our liquidity sweep would be up here next to these fair value gaps. But what does market end up doing? Which you're going to see here, and I'm going to pause it. We're waiting. We're going to sweep out these lows, right? And you see that little line right here. I'll explain that in a second. But as you can see, on NQ, we swept out lows. And that these are two pairs, and NASDAQ and ES, the S&P. So ES did not sweep out its low. ES's low was down here, and as you can see, that's way over there, right? ES did not sweep out these lows, but NQ did sweep out the lows, which we noticed. But what do we notice right after that? And then we get a 5 minute SMT, because as you can see, NQ made this point and it trended higher. It made a low and then went right back up. And while ES in the 5 minute time frame, which I'll show you in a second, made, let me play this through a little more. All right, here we go. On the 5 minute on NQ, it makes a low, right? Basically equal lows at this point. It just makes a low. The next candle makes a high. But on NQ, NQ makes a low, right, on this candle right here, and the next candle makes a lower low, therefore giving us an SMT. So I'm on ES because it's our lead pair, and I'm not waiting for a liquidity sweep because we got the liquidity sweep on NASDAQ. The SMT is what I'm looking at. Now, TJR, I'll show you what he ended up getting in on. But as of right now, if we get rid of this 5-minute because it got inversed, we can add on this 5-minute fair value gap right here, which is what I use for my entry, but I'll show you a different entry after this. So the 5-minute SMT. When we get 5-minute SMTs, when we get 5-minute SMTs, we go to the 1-minute to look for a break of structure, but not to enter on that break of structure. So at this point, we had that SMT get created, and this is on the 1-minute time frame now. We had a 1-minute, oh, wrong candle. We had a 1-minute break of structure right here. 1-minute break of structure. That does not mean we get in. We want to see a continuation. So when you are going to enter with SMTs, you want an SMT to be formed, and you want to find a lead pair. Then you are hoping to see a break of structure, and then you're hoping to see a continuation confluence. In this case, it was a fair value gap, which you will see here in a second. All right, at this point, what do we see right now? It left a 1-minute fair value gap. So we had our SMT get formed on NQ because NQ made a lower low, ES made a higher low. I believe that's how you say that. So it's ES is a lead pair because we're assuming, all right, now it's going to start trending up, and that's what it does for the day. So we wait for the 5-minute SMT, we go to the 1-minute time frame to get a break of structure, which we got on this candle, up candle, down candle, highs to the 2 points. That's our break. And we had a 1-minute fair value gap get created here. Perfect confluence. This is like such a beautiful confluence altogether. It comes in and it fills this. It fills it in. We immediately get rejection out of there. And this is where TJR ended up getting in, and my buddy Trade Boss Josh. But I think they could have gotten in on this candle or this candle. But I would have waited until this one. And you could have rode it all the way to here. Put your stops down to this low. That's a 1 to 2. You're risking $200. That would have been $400 on the account. And what I could have left is, because you see we had a 1 hour for value gap, I believe, right here. Yeah, it's a 1 hour. 1 hour for value gap in between here. So you could have wrote it out to the highs, which is what TJR, I think, did. And you could even make it like this is first, either these are first TP, second TP, but at this point, with more what we see, we're thinking this is the first TP, and then you can move on from there and figure out yours. But that could have played out to be a 1 to 4. I didn't get in there. I'll show you what I got in on. So we have this 5-minute inverse. What I've seen so far is with the liquidity sweep, S&T got formed, and I'm ignoring this, right? I didn't really even see this at that point, but as you can see, we are about to inverse. There we go. We inverse that. We inversed on the 1 minute. So the 5-minute gets inversed, which you'll see right around here. 5-minute gets inversed, right? So after I see the 5-minute get inverse, I got my liquidity sweep, a 5-minute inverse for value gap. Then I'm looking for a continuation. I got my continuation on the 2-minute time frame because we get a 2-minute fair value gap get made then. It fills that and starts trending higher, and then I waited for a 1-minute break of structure, which I would have gotten right here because we have the up candle, down candle, highs to the 2 points of the wicks. I enter in as soon as this candle closes. We'll just say right here. And I was riding it to that high. Put my stops down here. 1 to 1.73. That is basically it. Rode it to these highs. Now what I should have done is leave this as my first TP, right? And then this is the second TP, third TP, and then even up here all the way. And you'll see what market does throughout that time period. I'll show you in a second. Market starts trending. It's hitting all those TPs that would have gotten hidden. It's just trending, and then it inverses the 30-minute, trends lower, so people might be thinking, oh, no. Nope, just going to take out, seek and destroy. So we got a 30-minute. This is at this point in the trade. So this is something you can notice while you're already in a trade. But we are taking out highs. We go here, take out lows from here. Let me even zoom in. Right here, what do we have right here? Down candle, up candle, we have a low. Or you could consider this a high. Either way, these come down, take out this, or these lows in between here, and immediately trends higher. Ranges, takes out some lows in between here, trends higher. Takes out these highs then, and these highs then. And then it inverses the 30 minute. And what does it do before it wants to go higher? Comes down, and it takes out all this in between here. It takes out all these. Seek and destroy. Market seeks, and then it destroys. And what do we see after that? It keeps trending lower and lower. Like I said, taking out all these points then too. Basically erasing all this with the market boomstick. Isn't that nuts? So what I could have done is held that whole trade and even taken partials out. So take out certified winners, like take out money and then keep a little bit of money in to let it ride, and that would have been a 1 to 4.92 on the day, which would have been insane. I mean, you could even roll it to this 1 hour fair value gap that we have up here. But I mean, 1 to 4s are solid, and it's just if you can hit those consistently, you are profitable. But I missed out on that opportunity today, and as you can see, market immediately starts trending down. I'm assuming it goes down for the rest of the day. At this point, it's 12. But that was literally the trade I saw today, and I'm getting better at understanding SMTs. Like it's the same way as if you get a liquidity sweep, we wait for a confirmation confluence, so we wait for a breaker structure or inverse. We wait for a continuation, and you can enter in then, or you can wait for another confirmation and enter in. But when it comes to SMTs, I mean, it's literally like 5-minute SMT. Okay, you go down to the 1-minute time frame. You wait for your breaker structure, which is your confirmation. Then you wait for like a fair value gap getting filled, or an order block getting filled, or a breaker block getting filled. That's your continuation. And then you can either get in there, or you can wait for one more breaker structure or inverse, and you fucking get in then. And that's how you can use SMTs. Like high time frame, like 5-minute and even 15 minutes. If you get a 15-minute, I'm pretty sure you scale down to the 5-minute. But that's really it. And then for my strategy, what I used today, which I thought it was an A+ setup, it was just terrible handling on my part because it was an A+ setup. The setup was there. All I had to do was leave runners, which was a mental mistake, and that's a mistake on my end. Rather than like what I saw on the charts, I was like, I'm confident. I'm like, this should go take out those highs. This is exactly what I was looking for. And you can see what happens then here. It fucking went ballistic. It was nuts. This is an incredible trade right here. This is really fucking solid. And I saw my A+ setup, which was, like I said, liquidity sweep on NQ, but ES gave us an SMT, so I'm assuming we're trending higher. We get a 5-minute inverse, which we get a 5-minute inverse right between here, so we have my confirmation. Then I go down to the 2-minute and wait for my continuation, which it filled orders, rejects out of, and I waited for my 1-minute to get a breaker structure for my another confirmation. That's an A+ setup for me. And even if it was a late entry, if it would have hit this point and I would have gone out, then okay, that's a bad trade for the day. That's a 1 to 1. But this was an incredible trade because it goes for a 1 to 4. But I just didn't leave partials. So I risked 5 micros on the day. So I could have even at this point, once it hit this black line, taken out 2 micros or even 3. And then left one to go to this point, the top of this, to inverse this, or fill within here. That could have been, I have 2 micros left. And then 1 micro all the way to this point. And if I risk a little more, like if I risk like a 400 to 500, if I'm risking like 8 micros, 9 micros basically, I could sell those off each point and have multiple take profits. But I only had 1 today, and that kind of bit me in my ass. But like I said, so yeah, we had a liquidity sweep on NQ, but we had an SMT get formed because NQ took out a low while ES did not take out a low. ES ended up trending higher, so ES is our lead pair. So then I'm waiting for a 5-minute, like usually a 5-minute confirmation, which I got with the 5-minute inverse. There's probably a 5-minute breaker structure within here as well, but it still played out nice. So I got my 5-minute confirmation, which was my inverse for value gap. As soon as it inverses that, it comes and fills in on the 2-minute time frame. So it's filling in orders within there and rejecting out of it. So I go to the 1-minute markup where I could have either inverse fair value gap or a breaker structure. 9 out of 10 times it's going to be a breaker structure on your last confirmation. Breaker structure, I entered it on TradingView. I didn't even enter it on a trade of 8. I probably should have because I probably could have gotten a lot earlier entry. I mean, I don't know if it would have made much of a difference. But still, but that was the trade for today. Like I said, and that fucker ripped, and I'm mad excited about it, but I'm just not happy with my mental error, which is my own fault. Something to learn from. Um, but yeah, that was really it. I want to actually go back and see what NQ ended up doing while I was in the trade to see if NQ could have targeted anything. Um, Let me just play around with NQ. So yeah, NQ gets the liquidity sweep. Um, do we have an idea? Yeah, so we could have gotten a 5 minute inverse right here. NQ gets the liquidity. Oh, that's a 1 minute. Damn it. Yeah, I should try this. So let's say market opens, it trends up, makes a liquidity sweep, it inverses like a fair value gap in between here, but that's 1 minute. Let's just look in the 5 minute. Market opens, we get a fair value gap get created in between here. Market immediately trends down. And do I get, ooh, market trends down. I'll mark up that 5 minute fair value gap right there. It ends up inversing that on the 5 minute, which we can see there. Do we have any fair value gap that gets filled? Ooh. So yeah, 5 minute liquidity sweep on NQ, 5 minute inverse for value gap. That's our confirmation after confirmation after we get the liquidity sweep. Then we get a 2 minute for value gap. Does it fill it? No, it does not. Wow. I mean, kind of leaving it behind though. What about it? So yeah, I mean, I would more prefer that to get filled, to be honest. Um, hmm. I don't know if I could have saw entry on NQ. I really don't know if I could have saw entry on NQ. I don't think I could have. I mean, maybe on a 1 minute time frame, we had a 1 minute for value gap gets filled. But I just don't think there's really good entry criteria. I mean, what does it come up to? Is this a 30 minute for value gap? 15 minute? 1 hour? The fuck is this mark on my chart? 5 minute? 5 minute for value gap in between here. Is there anything else market ends up going to? I mean, NQ even swept out all its highs for the day. Didn't go up to that 1 hour. But I mean, not really worried about NQ though, on what NQ did. This is kind of hindsight. I just wanted to see for myself what it was doing, where it was tracing to. But yes, is where I took the play today. And happy with myself on predicting price to this point, because y'all, like, if you're a trader, you fucking, and if you're not, I don't know why you're watching this, but predicting price from this point all the way to these highs, pretty solid. Like, and I'm still getting good, decent at this shit, trying to get better. But dude, that was fucking just beautiful today. 1 to 4. I mean, damn, that could have been an $800, $900 day for me. But I mean, oh, maybe I think it'd have been $1,000 day actually. I don't know, but not worried about it on the account. Oh shoot, hello. All right, I just want to make sure I didn't fuck some shit up. On the account though, $52,118 is on the account. But yeah, this is really it, man. Let me show my screen. I don't know. I'm excited. I'm getting better at this shit, understanding it more, and even now with SMTs, like, I'm gonna watch some Mastermind from TJR tonight. But still, just like, I'm mad excited to see this shit, because SMTs I'm starting to understand, even with talking with my mentors, and they're even saying like, dude, you get a 5 minute SMT, you go to 1 minute, you wait for your 1 minute confirmation, and then your 1 minute continuation, and then you're fucking in. Or at that point, if that's an aggressive entry, you could wait for another confirmation. But once you get better market experience and you see things more over time, you start like noticing shit again in the market, and that's when you can get those aggressive entries like TJR does, like my buddy Josh does. I'd highly suggest, if any of you actually do trade, to watch TGR's trade recap from today. Fucking amazing. Just notice how he goes about trading, his thought process, how he doesn't keep emotions involved with it. You gotta really cut emotions out when you're on these charts, because you're playing with fucking money. But But yeah, that's really it, man. It's like, and just even seeing my setup, like I'm journaling things, so like even the time frames I'm seeing my confluences on and what I enter off of to see like what I have a better, like if let's say I get a 5 minute confirmation and I get a 5 minute continuation and then a 1 minute confirmation. Like if I see that, I want to track my win rate with it and my RRs. And I also want to track my win rate. Let's say if I see a 5 minute confirmation and then a 2 minute continuation and then a 1 minute confirmation, like is that what's my RRs with that? What's my win percentage with that? I want to track all of these things and just see where it can get me. Because that's how you get better at trading. It's just like market analysis and then tracking your own data. All this really comes down to the strategy. I feel like is pretty easy to understand once you get the hang of it. But then it all comes down to risk management, psychology. Like, let me show y'all something actually real quick. Why traders? Why? Day. Here we go. Sorry. All right, well, it just says 90% of traders lose money because of the following reasons. By the way, yeah, this is a real statistic. Some people say it's 98% that fail. Some people say, Google says it's 90% of traders fail. 90% of traders lose money because of the following reasons: lack of knowledge. You can teach that yourself over time. No idea how the stock market works and the stakeholders, competitors, limitations, and disadvantages of retail trader. I'm not a retail trader. Relying on news, tips, and other sources of information to trade. I don't do that. And then no trading plan, no risk to reward management. That's huge. Why day traders fail? Why do? Wonder if I have to put futures. All right. The high failure rate in day trading, including futures trading, is often attributed to a combination of factors, including emotional trading, lack of discipline, poor risk management, and inadequate knowledge. All right, let me just break this down. Including emotional trading, that's psychology. Lack of discipline, that's psychology. Poor risk management, that's psychology. And inadequate knowledge and education and statistics. I think that's bullshit. Like once you understand the shit, you understand the shit. Show that a significant portion of traders, often 90% or more, experience losses, highlighting the challenges inherent in this type of trading. Here's a more detailed look at why so many day traders fail. Lack of clear trading strategy and plan. Psychology right there. Unstructured approach. Many traders enter the market without a well-defined strategy, relying on hunches, tips, or news instead of structured approach. No trading plan. A lack of a solid trading plan, including entry and exit points, position sizing, and risk management, can lead to emotional trading and poor decision making. It all leads back to psychology. And then emotional trading, fear and greed, impulsivity, psychology, poor risk management, overexposure, ignoring stop loss orders, lack of position sizing. That comes down to psychology. Lack of knowledge and education, insufficient training, overtrading is psychology. And then unrealistic expectations, quick riches, psychology, FOMO. Oh, FOMO's a fucking, that's what I'm feeling today. Exactly that. Because I could have had a 1 to 4 and I only took a 1 to 1.73. 1 to 1.77. I'm having FOMO from this. But you know what I'm not going to do tomorrow? I'm not going to go into the market tomorrow and look for a huge fucking dub. Because I'm not going to be looking for these huge RRs. The least I look for is a 1 to 2. And that was a mistake on my end today. But I'm not going to have FOMO from this. I'm going to learn from it and learn that, okay, I need to learn when to take partials. I need to learn where to set stop losses, and that usually be break even when I take partials. And that's really it. That's literally it. And I could have done that today. But I was being goofy. I was not playing it smart with this. But yeah, high leverage, amplified risk, margin calls, static strategies, failing to learn from losses. That's another thing. Took a win today, but I took a loss on what I was doing inside of the trade. No, it's important for me to learn from that and understand, like, dude, I could have left, for example, just give an idea. Once we get up to this high, Oh no, this high up here. Once we get up to this high at this point, I could have, like I said, stops right here. I could have left runners and put the stops down to break even. So if the market comes back down to this point right here, I don't lose money. I took a dub. I lose what I could have made, but I already took money out. And I could have left runners, and it would have fucking trended up and down, up and down. I could have gone out right here, or I could have gone out one of these 2 points. It's all on me today. But it's important to learn from this shit. You know, don't be too upset about it. I don't know. I'm very excited, though. Very excited for tomorrow. Tomorrow for news, what do we have? Crude federal fund FOMC. Oh, that's at 1. Yo. 9:30. That's low-key late in the day, so I'll probably be looking for my setup before then. In the first hour. That's a yellow folder, dude. Tomorrow, low-key, we could get a solid setup tomorrow. Honestly. I would not mind that. But, yeah, that is literally the setup for today, what I saw. I'm going to go put this in my trade journal and mark shit out, and I'm going for a walk. I'm on my cut. All right. Outro music. I feel in my mind. It happens all the time. Peace, bitches. You know my